these crazy moves that were going on, just like a crypto going from a penny to 10 cents, like a Dogecoin, a Shiba Inu. Some of these .com companies did the same thing. And I just watched fake money explode, right? 100,000 to 3. I mean, I don't know about crazy, but it's been busy. It has been busy. I've been back and forth. I've been on a trip to Canada. I've been on trips, you know, just lots of business trips and talking to people and working on educational material because let's be honest, especially in bear markets, I think people have to learn, right? Learning is how you actually make money in bear markets, which is what everyone should be doing. I know it's not what most people are doing, but you should be. So education, learn, you won't fall into the same pitfalls that you fell into prior, and that saves you money. So I first started in .com bubble. This was back in like the late 90s, and it was all play money back then. So I didn't have any money at the time, but I got addicted because of these crazy moves that were going on, just like a crypto going from a penny to 10 cents, like a Dogecoin, a Shiba Inu. Some of these .com companies did the same thing. And I just watched fake money explode, right? 100,000 to 300,000. And it addicted me. I'm like, you know, if this was real money, I'd be pretty well off, right? And so I right there and then I was like, I'm going to learn how to do this. It literally took me years to figure it out, where I would have my small account, I'd lose it, I'd blow it up. Just everything that everyone in crypto is probably going through right now, because I didn't have a thesis. I didn't have a core about why I was making a trade other than, I was following everyone else. And like my mom and dad always said, if someone jumped off a building, would you do the same thing? No, right? So you have to figure it out for yourself. And I started to look at the charts. I started to see repetition in the charts. When this happens, the result is 80% of the time X or Y. So let's start trading that way. And so I started to create this thesis about every trade I get into. Why am I doing it? What are the factors? And before you knew it, I started to make money trading, and it's only gone up from there. So that's a real crash course in it. More nice to the markets in terms of his commentary. He wasn't so hard-nosed. The other term is hawkish, where he's going to raise more and more and just kind of crush the markets. So he was a little bit more dovish. The market loved that. Bitcoin loved it. We've seen all of crypto rally here. The stock market's rallying. And in all fairness, I mean, we've gone even as far as to see the US dollar starting to come down, because let me put up the DXY. This is the dollar, and look at the dollar collapse on that statement. So
wow.
The dollar had a big drop here. And the idea here is that if he's not going to raise as much, then it's likely that he'll start printing again. Therefore, that's more dollars in the system. So this is very whacked. I mean, trying to describe the way this is all working together is really messed up, because you could say, okay, well, if he's going to print more money, then isn't that bad for inflation? But the markets are more worried about a recession right now than the inflation side. We know the inflation's coming down. Look at gas. I mean, all these things have collapsed. Let me show you guys a picture, a gasoline chart here. Let me go to the daily chart. So this is the gas chart. You can see this is the daily gas chart. So this was June 3rd up here. So you can see gasoline has come down. That's going to bring down inflation. It's taking less money to fill up their gas tanks. And so again, we will see inflation come down. Now the market likes the fact that he's maybe closer to being done raising interest rates. Let me show you guys some other really cool stuff. So a lot of people, so I was bearish when we were at 68, 69,000. The charts were telling me that was going to happen. You have something called an M double top up here. This was a classic sign of resistance. The market again. So again, the market was guiding us that this bearish market was coming into play. Interestingly enough, I went bullish down here in the near term. I have a short-term price target of 25.5, maybe 28 to 30,000. I'm going to show you why. Just some cool stuff. So number one, here's your 2017 high. Draw a trend line straight and look at what you just hit. So
wow.
Basically the market stopped right at that 2017 high. Technically speaking, there's going to be some buyers there that are saying, oh, remember when it was at that level? Let me buy into crypto here. So that's number one. The other thing is, look at this. Look at how beautiful the market works. I'm going to go to something called a parallel channel right here. And what I'm going to do is I'm just going to connect these recent lows and look at what happens here. So we're going to connect these lows here, all of these lows, and I'm going to stretch a line right up. And look at how there's symmetry in that we hit the low, we came up, we touched here, we came down here again, we then came up, then we came down again, then we just hit the high. Then look at what we did yesterday. So if I came to you yesterday and I said, look at, we're at support, and support means you're at like a floor. You're standing on the floor. It's supporting you. And I said, what do you think crypto is going to do tomorrow on the Fed? You would look at this chart and say, well, it's on the floor, so it can't go down any lower. It's standing on the floor, so the path of least resistance is to the upside. So, I mean, again, this is just a crash course in like simple technical analysis, but it just, I mean, the fact that you were right here yesterday, you were on support, chances are, and just look at what the chart's done. It's basically gone to the highs, comes to the lows, then goes up. And so it's almost like this is, as a trader, what I do. And I'm able to kind of just notice these little things forming and saying, okay, well, probabilities. And by the way, in technical analysis, there's no such thing as 100%. You're going to be wrong occasionally, but it's about getting right as many times as possible. I generally nail about 80%. And I'm just using simple tools like this. Again, you know, here, down here hits, here it hits. So each time you're getting these little bounces up, right here again, up we go. So I mean, it's just cool stuff. TA is definitely some cool stuff. Ball inside until, now this is one of the things you have to be careful about if you're in crypto. What did this pattern do? Eventually, it broke lower. So you have to be a little careful because the same thing is occurring here. Even though I think we're going up to at least 25.5, which would be this upper area here, I would be a little careful because it does potentially signal at some point we could come down. Now, the beautiful thing about technical analysis is if it breaks above here, guess what? Now it failed. Now the bearish pattern failed. Now you think about further upside. So there's not only levels to buy, but also there's levels to say, okay, now it's broken where it should have pulled back, and now it can go up more because it's broken that level, right? So just really cool stuff here. And I just want to show you this one over here. I want to show you this, and let's see if we can come to the same conclusion. All right. So
yes.
Do you notice how you hit here? Well, first of all, you hit here, then you, sorry, I can zoom in a little bit here.
Yeah, that'll be perfect.
You came here, then you bounced down here, then you went up to here, then you came down here, then you kissed down here, and then you finally broke out. What's the difference between this one and this one, right? This one's down sloping, this one's up sloping. So see how this pattern, which is the same pattern just at a different angle versus this one down sloping channels are bullish and you got the breakout. And again, bullish means it's going to go up. Up sloping channels are bearish. Notice it broke down.
Wow.
So, you know, again, so you start to see these things where it gives you clues. It's like Blue's Clues. It's like dropping little clues here left and right about what the ultimate outcome could be, or at least the higher probability outcome is. And as a trader, you have to be able to read those, and then you can position yourself to maybe make money on them. I know. Initially, it's really daunting when you don't have a back. Like when you're brand new, it's pretty daunting because it looks like a bunch of jumbled nonsense. But when you start to really look into it, there's symmetry in the charts that's just fascinating, and it really does give people an edge. It's the only way I've ever found to trade profitably. Otherwise, you just kind of buy and hodl, right? And you hope, which is fine as well. If you have a long enough time horizon, I really truly believe hodling will be fine. But it's like, for me, I always look at it and I'm like, well, if I know price is going to go down, why wouldn't I exit and then just buy lower? You know, like those type of mentalities. And then I just get a better entry price and I can buy more coins instead of less, and, you know, and that kind of thing. So one of the things, and a couple things, so I actually am in somewhat in alignment. I have a 12 to 13,000 target on Bitcoin where I think it's going to go. One of the reasons why I don't think the 17.5 is the low is because a lot of people think it's the low psychologically.
Yes.
Yeah, psychologically, the markets tend to push you to the maximum where people will give up and just throw their arms up. And this is why emotion is such a detriment to investing and trading. You have to trade unemotionally because the markets know pain points. The market has an amazing sense of where it's going to push the majority of people, where they're going to throw in the towel. And then as soon as they all sell, then price is going to go up. And I don't think we're there yet. We haven't seen, you know, crypto is still on everyone's tongue. In 2018 and 19, after the 2017 high, no one talked about it. In fact, there were a lot of people saying it was dead, and that was the bottom when you saw that type of thing. So yeah, I mean, so bottom line is, just to go over how I get my price target, there's something called a measured move in technical analysis, which is, again, one of these freaky things in symmetry. But let me show you this. So if you take this high of 69,000 and you drop it here to this low, so you can see this is a pretty direct drop. Then you went into this sideways pattern, which we had shown before, right? This parallel sideways. So what you do is you take this distance here to this distance here, and you take that distance and you take this high pivot and do that same distance drop, and what you get is $12,000 to $13,000. So the idea is that this will replicate here when all is said and done, and then that has a good chance of being the absolute bottom on Bitcoin. So there's no guarantees again, but for me, that's where I will buy the majority of my Bitcoin. Having said that, technicals don't always play out. And so when we were at 19,000, I actually officially started my HODL position. I took, and just so everyone knows, I never buy all at one point. I'm a big dollar cost average person, DCA, right? Because I've been wrong enough to know that I'll be wrong again. And so at 19,000, I said, okay, well, how much money do I want to put in my HODL portfolio for Bitcoin? And so I selected that amount and I took 1/6 of that. So 1/6 of that amount, and I bought at 19,000. So I basically have 5 more 1/6 buys as it goes down, but at least I'm exposed. At least I have something in just in case. Maybe the 17.5 is the low. I mean, again, I have my analysis. Everyone has their analysis. I have no guarantees I'm going to be right. So at least I have some skin in the game. Every 2,000 to 3,000 down below, I will just buy another 1/6, another 1/6 until I accumulate my full amount. So this is a chart of Ethereum, and these are just some target prices. I'm going to remove them for now because I mean, amazing, amazing. So what you can basically see, so this is another classic pattern formation, and it's called a bull flag. And what you see is when you have a sharp move to the upside like this, what you do is you start to watch what happens afterwards. And when price goes sideways, that means that after a big move up, the idea is there's going to be some sellers that say, okay, I just made a lot of money. Someone was buying down here. They're selling. What you don't want to happen is for it to sell right back down. When it goes sideways like this, what it's telling you is that all those sellers that are taking profits are being met with buyers on the other side, and they're kind of they're buying all those coins from those sellers. And that's a bullish sign. What it tells you is even after this run, there's buyers still willing to buy in, and bull flags by their name tell you that price is likely going to go up. So I am bullish on Ethereum here. I think, again, we're looking for a break of around 16.25 here. You get through that, 1,715, and then 1,900 is your upside. Yeah, there's always a rhyme and a reason, right? I mean, that's the beautiful. A lot of people call technicals like astrology or like kind of like crazy talk or whatever, but like it really is truly amazing how you're able to generate so much short-term alpha from just looking at charts and kind of getting that insight into what it is. I think a lot of people don't know how to do it, and then they do it wrong, and then they're like, oh, it didn't work and all this. And number one, it doesn't always work. It's probabilities. But number two is if you do it right, you really do get about an 80% chance of success, which is really awesome. Yeah, I mean, definitely bear markets are a trader's market, right? I mean, we know that there's a majority of people that are holding Bitcoin. They bought like north of 55. So I mean, everyone's or not everyone, but a lot of people are underwater at this point. So this is a great market where traders will make money. Volatility is what gets you money. And again, just looking at that Bitcoin chart before, we saw how you could buy it every time it hit that line and make a nice little move, and then you exit and you just do it again and kind of rinse and repeat. And while price overall is just going sideways, you're able to make money after money after money. So it is definitely a trader's market. The only thing I would caution people about is it's shark infested, meaning that if you come in not knowing anything, you will get eaten alive, right? I mean, there are people out there that know what they're doing. You're going to not control your emotion. You won't have discipline coming in, 2 key components, and then you have to learn how to read the chart. So I don't want to say everyone should go out and start trading because you'll lose your money. But what I would say is start exploring it. Yes. Start researching it, learning about it, and then if you want, dabble with like a few bucks. Do something where you look at it like an educational experience, like maybe $100 or whatever, and you just do that and you see how it goes and see, did I learn anything? If I do this, does it work? Prove to yourself before you put big money on the line, because I can speak from experience, folks. It's like early on, I didn't know what I was doing, and I like just kept losing and losing. And of course I'd win some too, but then I would make a mistake and I'd lose like 50% of my account, and I'd have to like start over building it up again. And so you just want to be aware of that.